Company Commission of Malaysia (SSM) or Suruhanjaya Syarikat Malaysia. SSM is statutory body established in 2002. It regulates corporate and business affairs in Malaysia. The function of SSM: first of all, incorporating and registering company, business, and limited liability partner. This ensures all the entities are legally registered. Next, providing public access to company and business information. It acts as the main source of official record. After that, promoting good corporate governance. It educates and advises the public business community. Lastly, monitoring and enforcing companies with the company law. This ensures business comply with the Company Act 2016 and other regulations. Inland Revenue Board of Malaysia or LHDN, Lembaga Hasil Dalam Negeri. LHDN is one of the main agencies under the Ministry of Finance who takes responsibility for collecting and administering the country direct tax. The function of LHDN: firstly, collecting income tax. This ensures individual and company to pay tax according to Malaysian tax law. Lastly, administering the tax system. This include managing tax filing, tax assessment, refund, rebate, and exemption.
Auditing checks accuracy of financial statements, ensure records are true and fair. For example, external auditor. Taxation focus on preparing and managing tax, helps with tax compliance and planning. For example, tax consultant. Financial accounting records and report financial transactions, produce statements like balance sheet and income state. For example, like financial accountant.
Because the basic principle of accounting states asset, liabilities and equity should be recorded at the original price of transaction. For example, a machine purchased at 1,000 ringgit will be recorded in the financial statement at the value, although the market value of the machine must change either increase or increase after several years. The use of the conversation principle is a simple accounting idea that highlight the need to be careful when recognizing income, assets and liabilities. For example, if the original cost of inventory is 10,000 ringgit but the current market value is only 8,000 ringgit, then the inventory should be recorded at the low value is only 8,000 ringgit, not 10,000 ringgit. Consistency is a principle is all about using the same accounting method from one period to the next, making easier to the financial the same company or even the different company. For example, if a company using a FIFO method to evaluate inventory or straight line method to depreciate asset, the method should be used consistently every year to excuse financial report are the accurately compared. Matching is a principle is an accounting idea that say expenses should be recorded in the same period as the revenue they are connected to. In other words, every cost used to generate income over a period should be a match to the income. Accurate or the accurate basis is an accounting idea that means income expense should be recorded when they happen, not only when cash is received or paid. For example, the company received electricity bill for December 2024 for only 2,000 ringgit, but payment was made in January 2025. According to the accurate basis, electricity spending 2,000 ringgit was recorded in 2024 as electricity consumption according that year.
soft document. We have fast document. The firstly a sales invoice. It means document by the seller when selling goods on a credit. Proof sale and sold for the sale channel. Secondly, we have purchase invoice. It means document by the buyer when buying goods on credit. Proof of purchase and sold for the purchase channel. Thirdly, we have credit note. It means issued by the seller to a buyer to reduce amount buyer owes. It's like defined for specific invoice. Addition, we have document debit note. Issued by the seller to a buyer to increase the amount owed on an invoice. Lastly, we have document check counterfoil, a small stamp attached to a check that you keep when you write on the check. The example question is, based on transaction document above, you are required to prepare the relevant proof of right in trial, including the cash book. This is example question for sale invoice. Sale journal consists of date, account, folio, document number, and amount. This document shows a credit sale to a customer, namely Amesh Stationery sell goods on credit to Surya Business. The sale journal represents revenue that is recorded on the credit side. This is example question for purchase invoice. This document will be recorded on the purchase journal. This document shows a purchase good from supplier. The situation is Amesh Stationery Store buy goods on credit to Aina Business. Purchase are expenses recorded on the debit side, and the format used is the same as the sale channel.
For credit note, original price is RM70 after deducting 10% trade discount, which is RM7, remaining amount RM63. So the answer is sales return journal. It is because credit note is approved when the customer return the good to the merchant. So the book of prime entry for good returned by the customer is the sales return journal. Account that involved in this book of prime entry is Amesh Stationery Store, which is customer account, and sales return account DT for record of return goods. For debit note, the answer is purchase return journal. As we know, debit note is a proof of when the buyer returned the good to the supplier. So, the book of prime entry for good returned to the supplier is the purchase return journal. Account that involved in this book of prime entry is Ali Supplier, which is supplier credit reduced, and purchase return account CR for record of return goods. Lastly, for check counterfoil check is a small slip attached to a checkbook kept by the check issuer as proof of payment. The answer is cash book. When we issue a check, the money leaving the bank must be recorded as a credit in the bank column. That's why in the cash book, write D Furniture Store RM2,500 on the bank, which is credit section.